This is now the second week with SoFi closing at or near all-time highs, with the stock above $25 a share and poised to go higher. And it seems institutions and big funds are taking notice. SoFi is now being added to more indices. And in fact, this week, I bought more shares for the first time in a very long time. And I'll explain all the reasons why in this video. Let's jump right in. Okay, so it's been a really good couple of weeks for SoFi investors with the stock being at all-time highs, and that seems to be continuing for a couple of different reasons. And a lot of it is as a result of the tailwinds that we have for the remainder of this quarter, but also now we're having price discovery as a result of all these index inclusions. SoFi recently got added to the MSCI index, which we can see in this press release here, saying that 42 securities will be added to and 56 securities will be deleted from the MSCI ACWI index. The three largest additions are measured by full company market capitalization will be Rocket Lab, SoFi Technologies, and Affirm. And there's also this post here on Reddit, which highlights some more details. SoFi is the only fintech bank that combines a charter bank, a financial technology payment processing platform, and cyberbank core capabilities. This just talks a little bit about SoFi. Of course, we know the Jane Street news because they were a big fund that added a huge amount of SoFi very recently, in fact, and they were the primary ones that took advantage of that $1.5 billion offering at $20.85 on July 30th. Here we have the MSCI index that they're going to join as of close of August 26th, so a couple of days ago. SoFi is now officially in this index. This index serves as a benchmark for many investment funds and ETFs, which may either track the index or use it as a reference for portfolio construction. And so what you'll have here is you'll have a whole lot of price discovery because you have all of these other investment funds and ETFs that all of a sudden use this index as a reference point. And SoFi is now a part of that index. We also got news this week that SoFi is going to join the Bloomberg 500 index. This is a post from Chris, Data Driven Investing, saying that this change is going to happen prior to market open on September the 11th. Rocket Lab and Affirm are also being added. All three of these also just got added to the MSCI index as well. So here you can see that the Bloomberg 500 contains the 500 most highly capitalized US companies, weighted by their market cap, reflecting a market cap of 58.19 trillion. And here you can see some of the names that are added, and you can see SoFi Technologies right there. So we have two indices in the same week or so, and SoFi is now added to both of them. Why does that matter? Well, it matters for a couple of reasons. First and foremost, indices are just generally good for price discovery. Because there's so many funds and ETFs that track these indices, if you get a new entrant in there, it leads to more price discovery, right? So I was mentioning earlier tonight on the FinTech Friday episode that Affirm was one of those companies that I hadn't taken a look at since 2021. But since they reported this latest earnings and with Affirm being also added to these indices, I took a look at Affirm and I saw that their revenue has increased since that time in the last 4 years. Their financials are looking much better. They recently turned to profitability. And by all metrics, this is a company that I am more bullish on than I was 4 years ago. Many people will have that same reaction to SoFi because to many people who have not been in SoFi historically, it's just another ticker in a list of tickers that they may not have revisited in years. And so what happens as SoFi continues to break all-time highs and as they continue to be added to more and more indices, it not only adds a layer of legitimacy and a layer of validity as it opens up the pool of who can invest in this and investment firms and institutions that can invest in this in the form of Jane Street and others. But it also adds the price discovery because people are giving this a second or a third look over, perhaps for the first time in recent years. And as a result of this price discovery, you get good momentum, you get higher closes, you get good volume because you have layers of new investors that are now buying SoFi for the first time in the mid $20 range because they're bullish on the prospects going forward because the company is still executing. Similarly, I bought about 1,000 shares of SoFi this week. This has been my first purchase of SoFi in the last 6 months or so. I was buying SoFi through cash secured puts before the run up in the $11 and $12 range, but I even bought this week in the mid $20 range. And a big part of the reason is the catalyst that they have coming up. Management has their incentives. And I think that by large part, management is going to meet those incentives. They also have a lot of product updates coming in the quarter. They have a lot of tailwinds. They have accelerating growth rates. And I think a large part is all up to execution. And we have here a team that has proven that they can execute. Is SoFi a value purchase at this point? Absolutely not. I think it's something that's fairly valued. Were there better opportunities in the market from a valuation perspective for me to buy? Probably, but SoFi is also the company that's my number one largest position. And as a result of that, my number one largest that I've researched with the prospects that they have coming up, I'm still bullish on them continuing to execute and the stock going even higher than 26 into the 30s and 40s and 50s. And I just want to share a piece here on their performance stock units because that's going to become more and more relevant. Again, this is a post from Chris saying if this price action continues for another 45 to 60 days, then management's PSUs are going to be unlocked at the first tranche, which is, of course, $25. Keep in mind that they have to keep this for 90 days of weighted average above $25 a share. This means that the CEO is going to earn about $53.6 million in shares. Chris Lapointe, the CFO, is going to earn about $7 million and 277,000 shares. And the CEO of Galileo is going to earn about $6.2 million, about 250,000 shares. So as I mentioned just now, volume weighted 90-day trading average of the PSUs to vest. So if it can stay above $25 for another 2 months, it should be enough to hit the target and for management to unlock that first layer. Of course, this would be dilution for the rest of us, but it's something that management has earned and something that is very well deserved from the management team. Now, there's also one thing that I want to bring up here, and I'll share this post because this came out earlier today, where Anthony Noto is essentially taking out a loan and putting up his shares as collateral. Here we can see the Form 4 is for Anthony Noto. The date of the transaction is the 28th of August, so yesterday, and we got the filing earlier today. So you can read the explanation and the responses here, but to sum it up very simply, on August 28th, Anthony Noto got $24.1 million upfront by pledging 1.5 million shares of stock, keeping his rights to the stock. Now, by August 28th, 2028, 3 years from now, they must deliver either cash to repay their loan or they must deliver the shares. The share amount depends on the stock price. If the stock price is between $18.21 and $49.18, Anthony Noto can basically adjust the share number. If it's above $49.18, they can adjust it with a fraction. And if it's below $18.21, Anthony Noto must give up all 1.5 million shares. So the very worst case scenario is Anthony Noto is going to give up 1.5 million shares in 3 years as a result of this loan. But this has happened in the past, and in the past, you can either repay the loan in cash, or as the stock goes up, you end up paying less in shares than you would have otherwise given. Now, this is good for a couple of reasons. First of all, I mean, like he's taking out money against his shares. Why would somebody do this? Generally speaking, the reason you do this is tax reasons. But I also think that we just talked about the performance stock units, and Anthony Noto is going to get more shares, assuming that management is able to hit these tranches. So he's going to have more shares awarded to him anyways. It doesn't really matter in the grand scheme of things. The other thing here is that it really puts a floor on the stock price at $18 a share because he wouldn't be incentivized essentially to give up the full 1.5 million shares. But in either case, I don't think this is a big piece of news. You're going to have executives that collateralize their shares and take out loans against their stock position for tax purposes and also to take the money up front. Anthony Noto has done this in the past. I'm sure he's going to do it again in the future, especially if management stands to gain some more shares granted to them if they hit these tranches, which, I mean, we're going to see in the next 3 months if they do end up hitting them or not. Like I said, I bought more shares because I'm bullish on the prospects going forward. This company is not only executing, but they're actually accelerating in their growth. And now we have the added benefit of price discovery, which is going to lead to more people buying into SoFi and forming those higher tranches of investor classes, of people basically who discovered SoFi 2 weeks ago, listened to the latest earnings and bought their first set of shares at $25 or $24. And you're going to need those people, right? Because what you want is you want a sustained move upward, and you can't just have that with people that bought at $6 or $7 a share. And so I think that SoFi is going to be much higher. I think the momentum is strong, and I think that's going to be poised to continue. We'll see what happens, but really the company is set to execute very heavily in this quarter and throughout the end of 2025. So let's see where this ends up. Again, my price target for this year at the beginning of the year, I said it was going to be $28.50. It seems as though it's going to blow through that price target if this momentum keeps up, but we'll see. I want to see, of course, more indices adding SoFi. Of course, the biggest one of all is going to be the S&P 500 to be adding SoFi, of which SoFi is eligible. but there's a whole bunch of other stocks that are also eligible. So we'll see what happens from that perspective. Yeah, couldn't be more happy with SoFi right now and their execution. And I think the stock price is finally, for the first time in a very long time, reflecting what that company fundamentally has been doing for the last several years. Thank you so much for watching and supporting the channel all throughout this time. Congratulations to SoFi investors, and I'll see you in the next one.